All right. How's it going, everyone? All the traders out there. Hope it's Saturday. Today is April 8th, day before Easter Sunday. So happy early Easter Sunday. Hope you guys had a good day, good Friday. Type 1 in the chat. Let me know if you guys can hear me. So that would be great. And let me know you guys are seeing the disclaimers screen, making sure I'm on the right screen. Awesome. Thank you. All right. So yeah, I'm not going to read through the disclaimer. I think everything's clear, right? So trading's a high level of risk. You got to be careful with your money. Always demo trade, paper trade, right? Everything we're showing here is just for educational purposes, right? To help traders understand the market, what's going on in the market, understand how we trade, understand what we're looking for. So other than that, not a financial advisor, just an educator to help you understand markets, and we can all look at the market together. So awesome. Okay, great. Thank you for that. Thank you for confirming you guys can hear me great. Let me go ahead and switch over to now the fundamentals. Got that out of the way. Figured I have it on Saturday instead of Sunday. Forgot Easter Sunday. Brad brought that up, so I appreciated that. Let me know. So we just came back from spring break vacation out of Orlando, Florida. Had fun with the family and kids. So let's get down to business. Been a busy week with the unemployment report for non-farm payroll. So let's take a look and see what's going on this week after the Easter Sunday. So keep in mind, after a holiday weekend like Easter, Monday is always going to be low volume, right? And sometime even some central banks are still closed for some of the parts of the world, right? But other than that, it's going to be like a slow moving market on Monday. So for instance, on Sunday, I don't see anything happening. Obviously, there's nothing that really goes on Sunday. And then on Monday, this is all we have. So basically, you got the IMF meeting, which is the International Monetary Fund meeting that's happening all day. So I don't expect anything else coming out of the IMF meeting unless something drastically comes up. But that's when all of the central banks come together and all have the exchange of monetary policies and things like that they're doing. So there's always something being said behind closed doors at the IMF meeting, but I really don't trade on an IMF meeting, right? Whatever comes out of it, comes out of it. I'm trading what I see and what's on the market, and we'll take a look at the chart to see what's going on. So nothing really going on Monday, just no big news, no red folder news. So I'm going to expect there's going to be slow volume, right? This is a good time to really analyze your charts, get ready for some good setups, things like that. So that's all I'm basically going to be doing on Monday as well. And then moving on to Tuesday, that's when things start to warm up just a little bit. We got some speakers or FOMC speakers, and they are going to be speaking. That is going to have a slight impact on indices starting at 1:30, but after that, the market's pretty much done after that, right? If you think about anytime after 12 noon, London session is over, it's just all US volume. So I try not to take any new positions unless you're hoping to hold that position 1 or 2 days. If you take some swing position, that'll be a different story. But other than that, I expect a normal ebb and flow on Tuesday. So there's probably some good time to take an opportunity. Then we get into Asian session, which we have JPY, right? So JPY yen got bank lending, core machinery order, PPI. So there'll be some movements on JPY, whether it be positive strength or whether it be negative, whatever we see on the charts is what we're going to see, right? And if you're using any of our strategy in terms of cost averaging and hedging, then you can be right, you can be wrong, and still going to make money either way. We can make it. We'll manage the trade either way. But hopefully we can see some good opportunity coming out of JPY. I'll be looking to take some opportunity. We'll take a look at the charts in a few minutes to see what some opportunities possibly coming up for JPY. Okay, Then we're moving on to Wednesday. So Wednesday looked pretty impactful, right? So let's start with London session, which is nothing. So nothing for London session. Then you get into New York session, and this is when things get a little bit interesting right here, right? So first of all, you see that there's CPI, right, which is the core inflation. We got 6%. They're expecting it to come down to 5.2%. We just had a very strong unemployment non-farm payroll work report in terms of employment jobs being created, which was a lot. And then we had low unemployment. So that is not very good news for the US economy in a high inflationary state of economy, right? That strong labor market, not really good. That means that is just one part of the data points that the FOMC, the central banks, are going to need to consider raising interest rate. Employment is still strong. Until they get unemployment a little bit higher and get employment under control, inflation is just going to hang on. So I don't think it's going to come down that low. I'd be surprised if it does, but this is another data point that is going to be added on to what they believe. I think it's going to be a slow drop on inflation. So that'd be interesting to see on Wednesday. So we'll see. Then the big one is CAD at 10 a.m. So we got CAD bank, central bank news. They're at 4.5 and they're expected to stay at 4.5. So that might have a impact on Canadian dollar. If it stays the same, fundamentally it's supposed to weaken the currency because obviously interest rates are not going up and more of a pivot or a pause in interest rate for a pivot. So in other words, they get ready to cut interest rate. So we'll see. We'll trade what the chart shows us, but I would expect Canada to be a little weak. Okay, but anything could be said from the central banks. The Governor Bailey may say something. Not Governor Bailey, but the Prime Minister or the central bank governor for Canada may say something hawkish and maybe maintain the strength of Canadian dollar. We'll take a look, but there's definitely going to be some impact on Canadian dollar at 10 a.m. on Wednesday. So we got the press conference coming in about 11 a.m. And then we have more FOMC minutes. This is going to have significant impact on the currency, dollar currency, 2 o'clock p.m. Eastern time, but it's definitely going to have an impact on indices. US 30, S&P 500, NASDAQ on Wednesday. Expect to see some big movements. Now, especially after you have CPI, if the inflation rate is high or above 5.2, 6 point, what happens at the FOMC rate decision, not the rate decision, but the minutes, meaning the policies of what they had come to conclusion based on the last FOMC rate decision, this would give them more of a forward guidance, a forward looking on what they plan to do or what they're looking to do at the next rate decision, which will be coming on May 3rd in about 4 more weeks. So on May 3rd is the next FOMC rate decision. So that's going to have an impact on the currency, dollar crosses, as well as indices. And that's all happening on Wednesday. It's going to be very impactful. Okay. Coming into Asian session, we have the employment change that will have an impact on Australian dollars. So all your Australian crosses, Australian pairs, your odd, pound odd USD, odd JPY, odd yen, odd NCD will have a significant impact on that currency at about 9:30 p.m. Eastern time on Wednesday. Very impactful Wednesday. So Tuesday is going to be more of a setup for Wednesday, right? So I think it's going to be some big news, CPI. You got the FOMC rate decision, plus you got the Bank of Canada bank decisions, and then you have Australia employment change. Impactful Wednesday. Okay, back to back on dollar would be on Tuesday, on Thursday. We got some euro news that's going to have an impact on both pound and euro. And then after that, we have the US dollar again. And this will be for PPI, price producer indexes, as another data point for the economic conditions for the US dollar. And then you also got employment claims, which we already know is kind of low. This may have an uptick or not, but by that time, Tuesday's CPIs and the FOMC minutes, it's already going to have a significant impact on Thursday. Just expect to see some really good clear dollar movements and indices movements this week. And that's going to be a big one. Okay. And then after that, that's it we got for the rest of Thursday. Nothing else really happening. And then we got Friday, right? Friday is finishing off with some more US data points for the economic conditions. We got core retail sales here, and then we got the preliminary UOM measure sentiment. So that has a significant impact on Friday. But by that time, we've already got wore out by CPI, got wore out by PPI. Friday is not going to make any difference in terms of the dollar, what's already happening by the dollar or the index, the indices market. By the end of that week, it's already going to be on fire, right? So let's take a look on the charts, because last week we had the non-farm payroll, and the non-farm payroll set the tone about what's coming. And what I mean by that is, let's take a look at the FOMC rate decision here and update. So we can see right here, non-farm payroll showed that the employment for the US is very strong. Unemployment is still low and jobs are still getting created. So this has normally been the opposite. It was almost like 50-50 in terms of no rate decision, more of a pause, versus a 0.25 rate decision. Now, because of the non-farm payroll report that came in on Friday for the US dollar, this is now at 71.2% probability the Fed are going to increase interest rate at the FOMC, at the next FOMC rate decision on May 3rd. That is going to strengthen the dollar, right? And it's going to cause some significant concerns of the indices market, thinking it's getting ready to be a rally. And I think it's because, in my opinion, the market was becoming irrational. They were becoming more hopeful because of some of the other economic conditions, thinking that the Fed were not going to raise interest rate at the next FOMC rate decision, and be more of a pause, and then coming in July or June, pause in May, and then reduce interest rate in June. I think that was just too hopeful, and I think the stock market is about to get a slap of reality, and it's starting to show that now with a high probability of 71.2% that the Fed will need to continue to raise interest rate based on the latest non-farm payroll report, and that is going to cause a shocker in the stock market. And we'll take a look and see where the stock market is at, determine what are some of the possibilities that can happen. Again, this is all educational purposes. What we predict and how we predict, it does not guarantee it's going to happen. The market can happen. Again, the market is going to do what it's going to do. We are a participant in the market. We can only follow the market, take our best analysis, find enough confluences to take the trade and take the position. If we don't get enough confluences, then we don't take the position. But if we do and we're wrong, then we'll be able to hedge and manage it. Okay. Let's go straight to the charts and see what's going on. Let's start with the US dollar. Okay, so here we have the US dollar. This is on the daily charts. Got some supply and demands locations up here. Tighten this up a little bit. We can see that the market did come up almost about 50%. Well, it came down 50% from this swing low, this swing high came down 50%. But from this swing high, swing low, it did not come up 50% yet. The equilibrium is right here at 107,700. That's the equilibrium from this swing this swing high right here and this swing low, the equilibrium is right here, right? Now, that doesn't mean that the market will have to go there, but there is a point that we are not yet at an equilibrium of this swing, right? We are clearly in a downtrend, and that's a fact. So we just need to see where the market's going to potentially go from a technical standpoint, okay? So we had this market come all the way down to this zone here, down here, and it rallied up, broke the structure, came back up, came back right here, kind of gave it an equal high, and then it came down and became bearish, right? So this is where we're at right now. And the dollar is looking like it didn't come all the way down to this low. It basically came all the way down to that kind of a, I would say, kind of a support structure right here, right? Doesn't necessarily mean it needs to come all the way down this low in terms of that demand, but it did meet some resistance here. And price could react there, right? Price reacted here. Price reacted here. Obviously, it poked through here, and price is starting to react here. So what we need to look for is what we call a reject and retest, which is starting to look right now. Let me zoom in a little bit on a daily. So it's starting to look like it's starting to reject and retest. This is a reject, liquidity right here, and it's starting to come up, and then it came back down, and that is more of a retest. This is more of a retest as well. So this is the market structure, the breakup structure, right? Came down, created more of a high, which is currently right now a lower high, since this is a lower low, lower high, lower low, lower high. So what we need to see if this is going to hold, this zone right here is going to hold. And if it does, then we got a retest, we got a break of structure, and then we're going to have a change of character moving up. So this means possibly we could have a rejection point. Now, this is a perfect opportunity to go long, right? Because this is a very strong zone area, demand area. All of this is demand. Not here, not here. This is more supply way up there. Everything else is in the middle. So we're looking for high probability support in the demand zone, supply and demand zone. This right here is all demand. Anything in this area, you should be looking to buy, right? This right here, from this swing to this swing will be 100% retracement. Okay. Price breaks down, then we're going to lower. If price does not break anything in here down lower, then we are looking for potential reversal going back up, right? How far it's going to go up will determine, but we are at least going to this supply area, right? If price continue to hold and reject right there. That is what we are going to see, and we probably won't be able to see that until Wednesday, right? Tuesday, we may just see more ranging conditions. To be honest with you, we may just see more ranging conditions, but on Wednesday, now I don't know what the market's going to do from a prediction standpoint. The CPI could come in lower. Inflation rate could come at 5.2%. The expected 5.2% from the high 6%. It could come at 5.4. It could be 5.6, 5.6. That's all. That is actually irrelevant. Is how the market's going to react. Now, fundamentally, from a fundamental basic standpoint, if the inflation rate comes in on the CPI on Wednesday, come in at 5.2%, then obviously this is going to weaken the dollar, and we could come here. Expect that. We can't be surprised. That can come here. That doesn't mean it still can't reverse from here. It means there's still potential more downside potential, right? And then we can have PPI, and then it can get break, right? This is what we're going to be looking for if it comes down here. Is this going to break? Is it going to break this 100% retracement from this swing low and that swing high? That is what we're going to be seeing if price comes down. Now, I have to provide a different scenario because there is a possibility the price can still come down. We're in a downtrend. That is very clear. The dollar is bearish. However, we did get a couple of days of rejection here, and it is a very strong area of support in a demand area, right? This is demand pressure. So in the demand pressure, there is going to be more buyers than it is sellers, unless there's catastrophic or catalyst news to push this down. My thinking and what I'm looking for, I would be more bullish, right? I'm more bullish in the demand area than I am bearish. So in other words, just pull back. What I'm looking for to see if the dollar is going to come back down here, right? I want to see if it's going to come down and break this area, because if it come down to this area, we'll come here, right? Now, that doesn't mean I'm still bearish. I'm still bullish until it breaks this significant area. If it breaks that, then I'm all in for being bearish. Okay. So I don't have that confidence, and I don't have that clear evidence that we're going to be continual bearish, right? So I'm not looking to sell here. I'm looking for a reaction here, and my best bet, I'd rather be bullish and be wrong and then manage it if it comes down and cost average it out and hedge it, whatever. But in the demand area, I would be looking to want to buy and go long dollar and and catch the reversal here, meaning I would want to go short euro dollar, pound dollar. However, there is an opportunity that it can still come down, right? And I would have to look at the lower time frame, drop down 1 hour, one time frame lower, the 4 hour time frame, and to look for some evidence here. And you can see that there is some very clear rejection here, right? There is a very clear rejections on the 4 hour time frame, so you get a little bit more clue, and you can see where it's 1, 2, 3 good touches here, and then the dollar kind of bounced back up, and it came up and it's looking more bullish. However, all it did, it just created a lower high, just like this one. That doesn't mean it can come down. It means that there is structure, which is right here, which is from the previous low, previous high, right here. I need to see that break of structure. So that candlestick need to come up, need to be solid. That's a break, and then it needs a hold. So I need to see another follow through, and then we are ready to go ahead and buy, right? So we got one here, we got a test here, we got a lower low right there. This looked like a beginning of an uptrend, but it needs to be confirmed with a break of structure. And then we have a change of character, right? If that's the case, now I'm looking to go long. And this is what I would be looking for. Come way back up here. Let me go ahead and put that in yellow. So this is what I'll be looking for if we get that break, okay? If we do not get that break, and right now anything can happen, if we do not get this break of structure and price starts to come back down, then I will be looking for this break of structure. Still not do anything because it can bounce from here and go, because there's a very strong support there as well, a price reaction, right? This is where I would need to see the break of structure here. We get a break of structure here, price get down, then I'll be looking to short. Okay, so this is an area of break of structure to buy, go long the dollar. This area would be the break of structure to go bearish and go short on dollar. But as of right now, I'm more bullish on the dollar, and I would be expecting, with matching fundamental, knowing that we have a very strong employment in the US, non-farm payroll report proved that would create the bullishness in this dollar. And therefore, I would expect an agreement with the CME group website that there is a very high probability that the US will increase interest rate, therefore strengthen the dollar. And therefore, I believe the CPI may or may not have a significant impact on pushing the dollar even lower. I could be completely wrong, but I am going to take both the technical and based on what I expect from the fundamentals to look to go long on the dollar unless I get this break of structure here and this break of structure here. Hope that makes sense. So we need more evidence, and I think we're going to see it on Tuesday and definitely by Wednesday. Okay. Of course, we have artificial intelligence, predictive highs and predictive lows of the next day. That's going to help us give us some more confluence of things to look for. But with some fair value gaps here, got some really good demand zones. I like to see price come back right back up here. I think we're going to get an opportunity to see this one more time. And then we may get that pause. That pause, fundamentally, once the Feds, the US central banks, stop raising interest rate and we start pausing, I'm flipping the switch. And I'm letting all my coaching students know as well. I'll be flipping the switch to go more bearish and be more on the bearish side of the dollar because there's not going to be any more interest rate, because after the pause, then we're going to have the Fed pivot, which will start to reduce interest rate. We may not see the reduction of interest rate of 2023. A lot of investors are, and a lot of spectators and I would say experts believe there might be a pivot this year. I don't know. I don't think there's going to be a pivot this year. I think we may see a pivot 2024, but we will have to see what's up in the minutes. Powell did not signify there's going to be a cut or a reduction of interest rates this year in terms of a Fed pivot. I think he communicated before that there would not be an interest rate cut this year. It just does not make sense, especially when our inflation rate is still at a 6%, and it's not coming down towards the 2% target. So I'm going to remain bullish until we get the Fed pause of interest rates, which I'm expecting possibly in June. And then we're going to have no more interest rate for the remainder of the year. Then that's when I'll expect to see the dollar to become more weak, and therefore I'll be looking to be bearish. But until then, I think we're going to have one more run to the upside. And I think that CPI is going to push it, PPI is going to push it. And I think it's just going to continue on to get back to this area of demand, of supply. And I think we're going to see this one more time before we take a dip down. Okay. So that's where I'm at with the DXY. I think with this evidence right here, we got this rejection. It touched this area of structure. I'm looking for a break of structure coming Tuesday and Wednesday. If we get it, we're going up. If we do not get it and it starts to break this low, then I'll be looking to take out this. Then obviously I'll be looking to see how far it's going to go to be bearish. Okay. All right, let's switch over to gold, which is inversely correlated. Let me go ahead and clear this up. All right, so on gold, taking it to the daily, gold's been very, very bullish, very, very bullish, especially with all of the banks, central banks, not the central banks, but the regional banks failures and things like that. So there is a lot of confidence in gold and a lot of less confidence in the dollar, especially when the dollar's been weak for the last couple of weeks. But there is starting to show signs of the dollar strength, as we just saw with the non-farm payroll and the rejection in that support area on DXY. Well, looking at the gold, it looks like gold is also showing some possible rejection in this area, right? So this is the area of where gold is historically was located, right? So this was back in March 4th, 2022, when the Russia-Ukraine situation happened. This was right about 2071. I thought we were going to go pretty high. We did. We did break to 2000. We went up as high as 2032, and now we dipped, and we got a real nice pin bar rejection on the daily. This is a very, very big sign. So when you get that pin bar rejection, that is very clear liquidity grab right there. And now you got a follow through of a bearish candle right there, a daily candle. So with that being said, and being at a high supply area, well, same difference. I am looking in this area to be bearish, right? This is all supply. Until we get this break of structure up here, which I don't think we're going to be breaking this structure, not anytime soon, because the dollar would need to be extremely weak for this to kind of inversely go up and continue to go up. I think with that dollar being a little bit bullish, I'm looking for more shorting gold than I am going long on gold. So if we get more continuation of the strength on the dollar, CPI, PPI coming up, well, this only means we could potentially be seeing somewhere in this area before we go back up, right? So this is what I'm looking at from a swing. Let me see. From this swing low to this swing high, we came close to 50%. And then from this swing low, this swing high on the daily, I'm looking for gold to come at least 50%, but I think we're going to come all the way down to this area before we start to come up again, but at least minimum to about 1918. And it kind of makes sense to come there because there is a lot of price reaction around this area right here, right? So that is another area of demand in this area. Let me go ahead and highlight that right there and right there. Okay. Now there are some fair value gaps in here that I like to see the gold mitigate before it comes back up. And I do believe if the dollar continues to be strong, this is going to be the first area of location where I expect the gold to kind of drop. And then this would be if we get more continuation of the dollar strength, and I would like to see gold come down here. But definitely, this is where I'm thinking gold is going to come down to about 1918. This would be the first stop, 1900, 1920. This would be the first area of location where I expect to see gold drop. And then possibly if it breaks, which has some very good evidence to come down to this is a very strong demand area than this one. This is kind of weak right here because it's got some fair value gaps here. All of this has been mitigated. So I like to see gold come back down here, which it has a very good evidence to come down here if we get supporting confluence with the dollar continue to be strong. So other than that, I'm more bearish on gold. This is a very good area to go short if you have not already been short. Well, I was short here, then it went up. I shorted again and cost averaged it out. I'm already out of gold and I'm looking to add more gold short to profit some more gold, okay? Got some very good imbalances. This is a very good area of supply. I don't believe that we're quite ready to break historical records of all-time high for gold of 2074. I do not quite really believe we're there yet, right? Until we get the Fed pause on the dollar index and dollar just continue to be weak and that break of structure in the dollar, then I can expect to see more strength in gold and then I'll flip the switch on my bias. But right now in this area, this is not where I'll be looking to buy. If you were looking to buy, you should have bought down here. Buying down here would have been fine. And then hold on to your trade. But once you start to make this rejection right here and it start to look bullish, then I'll be looking to take short on gold. Obviously, the break of structure is in this area right here. This is where you want to see the break of structure here on a higher time frame. Let's look to the lower time frame here and go down to the 4 hour. There we go. So you can see where gold came up twice, came down here, and it may come back up to retest, but this would be the break of structure right there. It looked like it broke that structure. You see where that candle came in, that created that low, came back up, it looked like it breaking it, and it's staying around here. This is where I need to see gold stay below. It stays below there, we're dropping. And this would be my first target right here, or somewhere around here, like this. I like to see the pullbacks. Okay, but this would be my first area of confluence to see gold come down here in this area around 1920, and then obviously come down all the way down here before we start to see more bullishness. But right now, we're definitely in the premium zone of the swing low, swing high. On the 4-hour time frame, if you take the daily time frame and you take this swing low, the overall swing high there, again, we're in the premium zone. Again, we need to be looking and be more bearish than I am looking to go strong bullish. Okay, so that's what I'm looking for. That's what I'm banking on for gold, to see more bearishness. The CPI would let me know if this is not going to be the case, and if we get this break of structure, we are attacking all-time high, then I'll change my bias. But until then, I'll be looking to take a short. I could be wrong, and if I am, I'll hedge it, cost average it out, and win it either way, and then flip the script. Okay, so that is for gold. Let's flip over to S&P 500, kind of get an overview on what's going on with S&P 500, which is kind of the underlying overall theme for indices. Okay, so you can see here, we got this all-time high for S&P 500 here. It came all the way down here and created not an all-time low, but a historical low here that we haven't seen since 2020, right? Around November 2020. So we came down, came all the way down here, and then we started to make a little bit of a rally. And what I can tell you is, based on what I'm seeing, it's having a hard time breaking this area of it's a supply zone right here. This is area of resistance. Came up here, rejected, and we're here again. This right here, believe it or not, for me, is the line in the sand that would determine if we are now bullish in the market, because it is such a strong demand area, especially when you have very strong confluence of, it was a very clear downtrend channel here. And then we finally broke that channel, rejected, came back, rejected there, bounced, came back up, and now we're there now. Now it's like, what's next, right? So the point is, we need to break this zone. We need to break that zone. We need to break that zone for us to be determined to say, hey, we got to break, got to retest, and then we'll come here. We come here, we'll already be bullish, right? The market will start to recover. We haven't been this high since April 2022, last year. This is a year later, and we're down here still. Okay, we're not even close to being up here. This, for me, right here, would be the line in the sand, this break, to tell us that we're back to recovering. With the inflationary rate high, I don't see us breaking this. So therefore, again, I'm bearish, right? So I see us coming back down. And we've already had this rejection right there. See the retest here, reject and retest. Fair value gap, mitigated. I'm seeing this. This is what I'm seeing. I think we're going to come back down here again. Now, I'm not sure if we're going to come down this low. I don't think so. Obviously, we get this break. For me, this would be that recession scare, the R word, will start to kick in, right? And then we're going to be definitely coming down, exploring the all-time low here back in October 22, we'll be exploring that. But I don't think we're going to go that low. I think the CPI data is definitely going to come down here. The FOMC rate decision is going to push this down here. And I think the Fed pause pivot, or the Fed pause coming up in June 14th. And I think this will start to kind of push this up here. And then maybe in July 26th with another FOMC rate decision of no rate increase. I think that's going to be the barrier that might break it. So we need some type of major catalyst to break this area of resistance right here. And we're going to need a very strong catalyst to break this area of support. As you can see, we're now in this range since December of end of last year. We caught the bottom, caught the top, caught the bottom. I think we're at the top. I think we're coming back down. So with S&P 500 and the indices, I'm looking to short US 30, NASDAQ, S&P 500. I would like to see more bearishness in there. I think with that decision, I think we are going to be, with the dollar strength, I think this is going to definitely flip the script on any chance of that bull recovery of the rally that we've been experiencing since early March right here. I think this is going to be short-lived and we're not quite ready yet. I think this is going to come back down. So I'm looking to be more bearish on S&P 500 and the indices market. Okay, let's flip over to BTC real quick. That's another inverse correlated to the dollar to see what's going on here. We can see right now it's hovering around 27. So we're in, this is my last marker right here. So it looked like the range is right here versus lower than I had initially had. So it looks like we're in that range. So we're in this range between 29 and 26, 27, 26.5. So 29.1 and 26.5 is where it's going on with Bitcoin. So I think Bitcoin is going to continue down this path here. We may see it poke down to about 25 to take care of this fair value gap. It may or may not, but I think we are definitely going to eventually, right after the CPI, after the FOMC rate decision in May, I think we're going to be in this range. We're going to be in this range of the 29.1. We may see as low as 25. I believe, I'm pretty confident, based on my experience with BTC kind of matching up to falling indices, with the dollar being strong, I think this is just going to hold back BTC just a little bit. But after the FOMC rate decision on May 3rd, I think this is going to shoot up. I think we're going to be able to be on that bull run. And after 29, we're going to start to see 38, right? We'll go up to 31. We'll be in here for a little bit. I think it's going to be more kind of looking like, let me see, may come down here a little bit, then we'll come back up. And I think we're going to be something like that. So probably within the next 2 to 3 months, possibly by July, I think see us being up here by July of this year up to 40,000. And that's with no rate decision in June. That's going to bring this up. No rate decision in July. I think that's going to push this up. And that's when we'll start to see the rally on the stock market as well. Okay. So that's my Bitcoin. I think we're going to stay in the range. This is not quite ready to buy yet. I think we should start to see maybe a little bit more bearishness, possibly come down to 26, 26.5. This is when it would be a good opportunity to buy. I don't think we're going to come low, below the 25. I think that bottom of if you look at it here, I think that bottom of Bitcoin, I think we've seen it already. We're way past. Think about it. We're way past 15,200. That's how far Bitcoin came down to. About 15,005, 15,000. Yep, 15,005. We're now at 27.8, and we went as high as 29. You think it's going to come all the way down 15.5 again? I don't think so. I think we've seen the bottom of it of this year, 2023. Where now we look at it. Higher highs, higher lows, higher highs. We're in a range. We may see a higher low. We're in a bull run. Bitcoin is moving. It's going to be in this little range a little bit, and then boom, next month or around June, we're going to come back up here. By July, we should probably start to see around 40,000 for Bitcoin. Okay, good time to consider buying Bitcoin. If you don't buy it down here, good time to buy it. If you don't buy it down here, wait for it to pull back a little bit, buy it again. Okay, all right, that's on Bitcoin. Let's get into some forex pairs, starting with Euro USD. All right, go ahead and move all this drawing. Okay, so with the dollar being strong, possibly, right? What I'm thinking, we have not been able to take out this high. Why is that? Why have we not been able to take out this high on Euro USD of 110, 110.4? Ain't close, but not close enough, right? This is a very strong area of supply right here, obviously, very strong. This is the 110, 111, 112. This marker right here will be, the break of this marker will be the end of the bearish era for Euro USD. I think we've seen that low that was below parity. I think that's over. We're in the uptrend on a higher time frame. We are bullish on the highest time frame, and I am bullish on a higher time frame, meaning like the weekly and the daily. However, we have this pullback. I think we are going to get a little bit of a pullback back down. Okay, so got this. This was a nice pullback. Everybody thought we were back to going back down here, which was the equilibrium from this swing low, swing high. I thought we were going to go that low as well. However, it looked like we may be able to avoid that. I'm not sure. However, with the dollar being strong, I'm not looking to buy up here. Not with the possibility of dollar being strong. I need to see the break of this, of course. This would be the break of structure for me, and then this area of demand right here, so supply. This would be, if we break this, we're coming up here. We may range around here. We may pull back. And once we break this, boy, we're going to be looking really good. For me, we break this right here. This would be a good sign to tell me, listen, we break this. This is what I'm talking about. We break this and it comes up. And we break this. We come around here and we start to look like this. I'm bullish, right? I'm ready to go. Right? If we don't come back around here. However, I don't think we're there yet. We're having a hard time breaking this. We're having a hard time coming back up here from February 1st high. Even if I'm looking for us to be bearish, more like around here. Even if the euro dollar and the dollar gets weak one more time and it comes up here, even if it touches until it breaks this area, I'm going to be right now on the side of looking to sell Euro USD. Let's go to the 4-hour time frame, tell you exactly what I'm talking about for some more evidence of candlestick patterns and so forth. You can see right here, we had a lot of rejection in this area right here. A lot of areas, opportunities where we could have rejected. Now, that's not to say we can't still reject this, but we failed to create another higher high, right? So this was a higher high, higher low. This is more like just a kind of a low high. So if we do not break this and break this to come up here, then I'll be looking to sell your USD back to this area. And this area of demand. Okay. That's what I'll be looking to do before we start to come back up here. Okay. We're in the premium area. like I said, it could still come up here. And with this evidence of confluence that on a lower time frame, we got this high failure, boom, came back up. We pulled back, did not create a higher high. We actually created a lower high. We're starting to break this structure here. This would be the breakup structure that we're looking for right there, because that is the lower low. We break that, then we have what we call a change of character, right, on your USD. So that's testing it. It pierced it, but didn't break. We need to see the break, and that will say that we're now coming back and looking more bearish right now. Okay, we didn't take out this high. I was looking for it to take out this high. We didn't take this high to come to this high. It came up and created a lower high, coming back to this lower low. We break it, change of character, we're going down. And I think the Wednesday CPI data is going to determine that. With that being said, I believe that's going to be the same with, yep, pound USD. Hold on, sorry about that. All right, so coming back to pound USD. So this is on the daily. Yep, we got this very strong area of supply. And it looking like it's failure to break this area. I'm sure you guys will all agree based on looking at that. Got this area of supply, failure to break it here, we failed to break it here. And it looking like it's, yeah, it's failing to break there. So with that being said, I would be looking to short. This is an area of supply. I can't see myself buying it. If I were to buy it, I would be looking to stay until it breaks. But I'm no longer looking to buy pound USD. If the dollar is rejecting, it's not going lower, this is what I need to see. We need to see, this is for pound dollar, this is the line in the sand for pound dollar. We see this break, we're going up, right? So in other words, we see this break, retest, oh yeah, that's it, we're going back up, right? Now, do I believe we're going to go up? Oh yeah, we're going to go up in the long run. It's very clear. We're in an uptrend. That's very clear on a higher time frame, the monthly, the weekly, right here. Based on the monthly, based on the weekly, we're in an uptrend. Absolutely, we're in an uptrend. On the daily, absolutely, we're in an uptrend. But there is pullback that's going to happen, right? There's going to be pullback, just like it was here, just like it was here, and just like it's looking like right here. The question is how much of a pullback, and that was going to be determined on the catalyst of any fundamental news to break this strong area of supply, right? And we start there, we go down to the lower time frame. This is a nice pullback, and I like that because it looked like it wants to, you know, higher highs, higher lows, higher highs here. This could be the higher low for it to go uptrend. However, this is a structure too, right? This is a lower low. And if we do not go up to take out this high, even if we come up equal high, right? we need to create more bullish movements. I need to see more bullish movement going up. And this is obviously pulling back, just like this. This is kind of in a pullback. Right now, we're just in a pullback. It's not a reversal. When is a reversal? It's a reversal when we break this structure right here. When we break that structure, then we're going to have a change of character. This zone, this needs a break. And with the dollar strength possible, I can see us not yet ready to break this zone of supply. If we break this, then I am looking for us to come down to this area. This is what area where I like to see pound USD come back down. Now, could it come all the way down that low? It could, or it could just come down to this low, right? We would need to see around that time how long it takes for, pound USD to come down this low. If it comes down within the end of the month, yeah, it obviously with the FOMC rate decision May 3rd, I think that's going to continue to push just even further. But if it only comes here and then May 3rd, it barely gets here, then by that time we'll make a determination if there is more downside movement opportunity for pound US dollar to come all the way back down to retest a very high demand area of 118 or anywhere in this area right here, which I can see there is a possibility that we could see. See. There's a nice fair value gap here. We could see somewhere around here. I could see that happening. That'd be another area of demand here. We've got some fair value gaps that was created, some breakage structure. But this is a very good area. I would like to see pound USD come down low. If you take the swing high, the swing low, well, obviously we're in a premium area. This is not where I would be wanting to look to go long. I would look for more of a structure pullback and a break of structure. Okay, this is more of just following market structure. If we get this hold and start to go up, then I would be looking for a break and retest in this area because it could do nothing more. If anything, it could just come up right here, come up right here, and looking like it's going to go up. It's looking like it's going to go up, and then boom, we get this. So in other words, we get an M, right? That M structure right there. In other words, this is nothing more than a first leg, and then this is the second leg. That could happen, right? So that's why, for me, the line in the sand is the break of that structure there. For us to go higher, if we don't get that, and we just come up, I'm not willing to buy just to get right here, right? All of this is suspect to me, and all of this is supply. Until we get that break of structure, then we're going to another higher trading range. We're going higher. But other than that, this is a nice pullback. But I would normally say, hey, let's go ahead and get into a buy. But when you're at a very key area of supply, this is not where you want to get into go long. Right here has been great to go long. Right here has been great to go long. Right? Right here has been perfect to go long. This is perfect. That's perfect. But when you're in a very strong area of supply area, right here, this is possibly pullback reversal, right? All of this right here going up is perfect. This is where you want to get into a buy. If you missed this one, this is a nice area to go buy. If you missed this one, this is a nice area to go buy. If you missed that one, this is, to me, in my opinion, not ready to go buy, especially on the 4-hour and daily time frame when it's looking like it's starting to break, and this would be the line in the sand. We need to see that break of structure right there we get that break of structure, we're going lower. If not, I'm looking to see what it does at this higher time frame. This is a very, very strong. We haven't been back over here since last year, June 2022. We have not been lower. We break that, then we're going to be at an all-time, since June 22, looking to go higher back to 1.3, which is great. We'll be in total recovery of the pound USD. But for this to happen, yeah, the dollar would have to be extremely weak. And I don't see that break of structure on the dollar. So we're in a very key area of fundamentals and technical to see the dollar is going to get, if the dollar breaking goes weak, as we saw earlier, then this is going up. But I don't quite see that yet. And everything is pointing me at that we're in a very key high supply area for the indices. We had a supply area for your dollar. We had a supply area for gold. Everything technically is pointing for a prime suspect for a reversal back to the downside, inverse correlated to the DXY. Unless the DXY break that strong support and demand area that we saw earlier, I'm going to be bearish on anything inverse correlated to the dollar or the quote US dollar pair, which is USD on the right-hand side of the pair, like Euro USD, pound USD, and odd USD. So for pound USD, I'm bearish. Obviously with odd USD, same thing, right? I'm going to get on the side of odd USD coming back down here again. So that was a nice little run, taking advantage of the dollar weakness. We failed to break this high of 0.67. Now it's looking like we rejected off of there. You can see, look at 1, 2, 3 of days of bearishness. Let's look at the 4 hour. And you can see it very clearly. You see where we were going up, and then we came down, created a lower low, came back up, did not take out that high, became the whole lower high. This right here would have been a perfect opportunity to take that short. As you can see, that dollar going low, right? I'm suspecting us to continue going lower. Okay, so this is what I'm looking for. Odd USD go lower, I'm bearish. Look at NCD USD. Same difference. I'm expecting NCD USD to come back down here again. We clearly rejected that. We did not take out that high for us to return back to the higher high. We had a very clear liquidity grab. That was a very nice wick liquidity grab. Came up here, mitigated anything that was up here, reached up to this equal high, big daily breakdown, and it looked like we're getting a follow through here. So for me, we're coming back here again. Okay, I'm bearish on NCD USD, dollar CAD. Now we're looking for the correlation to dollar CAD, and oh, this is a nice pattern here. So we have this nice breakdown, came back up, breakdown, nice break to the upside of that supply area. And then we had a nice bear run down, right? Coming across just moving averages, came close to this demand area, and now we're looking to go bullish. Let me go ahead and clear all this up. That was an order block right here. It came down and mitigated. Did not come any lower than that. That would have been the next area of demand. And it looking like we're rejecting that area. This is nice. And all we need is a what? A break of structure right there. Get that break of structure, you know what we got. I think we're going to come back up here to this area. Got a lot of fair value gaps. So with that being said, with dollar CAD, I think we're going to come back up. So dollar strength, possibly, and that would mean also CAD weakness. So that no interest rate change on CAD could be the equal catalyst with the dollar strength to push this back up. Okay, we got a nice clear rejection here. We did not come back down, and we got 1, 2, 3, 4 days of bullishness. If you look at the 4-hour time frame, you can see where it's very, very clear. To me, my friend, that is a clear reversal, right? Obviously, we got this nice little break of structure here. Right, got that nice little break of structure on the lower time frame, and that is a nice little change of character there. But for me, I want more change of character on a higher time frame. You know, we get this in this area of supply right here. We break that. We break this. We're going up higher, and I think we are. I think we're in this nice reversal. We failed to break that. Look at that. We came down, created a little bit of a lower low, and then we came back, and it just continued to create it more higher highs, higher lows, higher highs, higher lows. So with me, I'm bullish dollar CAD. So I'll be looking to go long and bullish CAD. Okay, let's look at dollar Swiss francs. Ooh, dollar Swiss francs came all the way back down here. And it came down to this area as well and touched it. And now it's looking to want to go back up. Okay. So with that being said, with dollar Swiss francs and dollar strength, yep, I'm looking for mitigation to come. Obviously, take out this little higher high way down here. And I think we're going to come back up here. Okay. So dollar Swiss francs, it'd be nice to come way back up here. I don't think the dollar's going to be strong that long. I could be wrong, but we can at least come back to that equal high, right? Got the swing high, got the swing low. That was a nice pullback. We failed to break it, so I'm looking for more confluence here. Dollar strength, boom, CPI, PPI, FOMC rate decision. That's what I'm looking for with the dollar strength. Therefore, I'm bullish on dollar Swiss francs. Okay, with dollar yen. So with dollar yen, it's looking like we got some nice support confluence there. It's looking like it's right on that. I want to call like the trend line support, right? But for me, what I see is a change of character, right, of structure right there. We need to see that. And with that being said, dollar strength, I think we're going to see that again. Okay. We'll see that again. We're going to see some more upside to dollar yen, and then dollar weakness. Then we'll probably come back down. So I'm going to put this and hold that right there. Okay. Then I'll be looking for around May, June-ish with this area of supply up here. This is when I'll be looking for the dollar yen to get weak. So we're going to be in this range a little bit. Okay. So with dollar yen, I'm looking to be bullish. I'm going to be looking to go long. As you can see right here, we got this low, lower high, or what looks like a higher low, higher high, and this looked like a higher low. It did not take out this low. And looking like we're going to break this change of character. With that being said, then I'll be looking to stay bullish on dollar yen. Nice fair value gap there. Take it up to this next supply area That's going to be a nice little trade. Looking at potential another 615 pips over the course of the weeks. Obviously, this is going to be going up and down, up and down, up and down, up and down all the way. Okay, this is not going to be in one day. It's going to be more over a course of a week or two. Okay, let's go to some minor pairs now. Let's go to Euro Yen. Nice. Came back up way back, came back here, came way back up there. That's nice. Okay. Well, we're going to need to break this structure if we're going to go back down. So I don't know if we're going to break that structure. It looks like it wants to come back up. And with that being said, I think it is going to come back up. So I think it's going to come back up one more time. I like to see, I think the dollar yen is going to come up one more time. And then once we get up here, then we'll probably come back down. Okay. I don't see it breaking, coming up back up here. It's got to break this area of demand here. This is in a very tight range, right? Came back up here, came down, came up here, came back down, came back way up here, equal high, came down, and it's looking like it's bouncing up. So it's going to probably come back up here once again before. I think we're going to play in this range a little bit. This is a very tough situation for Euro Yen. Ultimately, I want to see Euro Yen come all the way back down here, and it will. It will. It's going to probably play up here a little bit, and then eventually come down. So with that being said, I'm looking for a short-term trade with Euro Yen possibly coming up, and then we're going to start to see more downside. We may not see it come up this high. We may not see it to come up this high. We may see it start to come down now, but I'm looking for a little bit of yen weakness that supports the dollar yen. That also kind of tells me that if we get a dollar yen weakness, this is going to come up. We get any yen weakness, this is going to get pushed up, and then eventually we're going to start to come back down. Okay, let's take a look at pound yen. Ooh, pound yen is looking like it's creating a lower high right there. It looks like we're holding that zone right there. You can see where we are creating lower lows, lower highs. And I think this is going to go up a little bit more before we come back down. So with that being said, I think we're going to come back up here. We could possibly come up here and then possibly come down. Okay. In the meantime, I think we got more room to possibly come up here. Obviously, we need to break up this structure for that to happen. If this does not break this, then we are going to come back down. In other words, this could come and look like this. Okay, this break of structure right here, this zone, that's what needs to be broken. If we don't get this break of structure of this supply zone, then this supply zone would be an area to where it could be looking to short, which is not a bad thing to do. This is not a bad thing to look for short, because if it does come up, you just short it again, because this is the next area of supply. Now, the reason why I said you would want to be more short, because this is about as high we've seen price since January of 2016. That was a very, very long time ago, 2016. Okay, so that's how long we have never seen price being above this January 2016. And since this high right here of October 22, we've been on this ranging, ugly, nasty looking movement. So that's why I'm looking for pound yen to come down here, start ranging, start coming down here, right? But I think we're going to We're going to see more ranging up here until yen start to pick up some strength. I think it's going to be that catalyst to where yen is going to have to start raising some interest rate for us to get this bounce. Other than that, we may stay in this range. In other words, we may just continue to stay in this range. Okay, so this is going to be a little tricky. Good for scalping opportunity. Taking pound yen a little bit bullishness for now, and then we'll see what happens in this area. Not a bad area to take a short, but again, it comes up. Got to be able to either take an exit, take a loss on that stop loss, or you can cost average that out and hedge it, right? This is what we do just in case this does not go in our favor. You never know what the market's going to do, but right now it is an uptrend. So pound yen, I'm bullish. CAD yen. CAD yen came down, came up, came back down. Like we're going up, right? This is where we could be going. So for CAD yen, we're looking at about another 282 pips opportunity right there. That would be my next area of supply. I do not believe we will come all the way back up here again, but hell, never know. But until then, I'm looking to go long on CAD yen. So we came back down, we're holding it right here. This would be actually the break of structure if it needs to come down. I'm not bearish until it breaks this change of character. We don't break this change of character. To me, this is just more of a higher low, right? This is a low, nice low here. We had this nice move right here. This is that support right here, just nice trend line down. And we look like we have a market structure support of change right there. And sure enough, there it is. So came up, broke this structure, came up, came in and gave us a higher high. So looking at a higher low. If it don't break this, we're going up. Okay, so I'm bullish on CAD yen. AUD yen. AUD yen is looking to be bullish. Guys, came down here, same thing. Gave us a higher low. This is looking like it wants to come back up. So AUD yen, I'm bullish. Come back up, give us about another possibly 260 pip more to the upside. NCD yen. In this nice little range. I don't like this setup more than I like the AUD yen. AUD yen looks more better between the two, between NCD yen and AUD yen. This looks like a nice structure, nice clean, higher highs, higher lows, higher highs, and possibly even higher. But right now, at least for that, when you look at NCD yen between the two, if I had a choice between AUD yen and NCD yen, this is nothing but one nasty range. And yes, it tells me that there's a low, a high, and a higher low. But how much more, right? How much more could this go? Could it go here? Could it go here? And then turn down? It could. But it's at least going to go in this area of this range. That's nice little range here. That's in between right now. It's been in this range, so it looked like it's going to stay in this range for a little bit longer. But long term, definitely going to be looking for that fine breakup structure here. Come back down here, long term. Okay. So right now, I'm looking like NCD yen, looking to be more bullish. Okay, how about chef's yen? Chef yen look like it doesn't have that much room to go, but it looking like it wants to go higher, right? And then come back down here again. This is a nice area of demand. It had a hard time breaking that. Looked like it may come back and give it one more time. Got this nice little structure there. Looking higher, so it's still looking bullish on chef yen. So we may see a little bit more bullishness. If I was to do anything with chef yen, if anybody asked me, what would you do with chef yen? Short it. And why'd you say you're bullish? Short term. But if I was to do anything, I would be looking to buy it. Obviously, if you sell it now, it may go up on. So I would say wait for it to give you some more confluence. That's on a weekly. You can see on a weekly why I'm saying I'm more bearish overall. Right? Anytime it goes up, you want to short it. So if you wanted to buy it, you could. Let's go to the 4-hour time frame to show you what I'm talking about. It's right now, it's on a bullish run, right? It's more bullish right now. I can see it coming back up, as you can see. It's looking like it's already taken out this high. It's going to come up to this area of supply. You can short it here, or you can wait till it comes up about another 84, maybe to another 141 pips, and then short it, or don't take any position and wait for price to come up here and then looking to short. That's when you would want to short. Right? If you get into a trade now and this thing push up, you're looking at a potential maybe 80 pips, 141 pip drawdown. Not much if you put some small lot sizes, but I don't see it breaking anything above here because we're in a very key supply area, right? This is all supply. This is area where you would want to look to short, right? So if you wanted to long this would have been a great time to long. You could scalp it, get nice 84, 144 pips, but what? Here's what I'm saying. It's bullish, but long term, once it get up here, I'm not doing nothing else but looking to short. I'll take a short here. I don't care if it goes up here, here, here. Anywhere in this area is where I want to short it. Okay? Like it is right now. Anywhere in this area, it's short. Anything is supply. This is all supply for chefs yen. And even if you buy here, even if you short there and it goes up against you and drawdown, short it again. It goes up, short it again. And that's how we'll cost average that thing. And we're going to ride this thing all the way down. Or every time it pops up in this area, you should have shorted. Should have shorted there, you would have had a nice pip run. Came back up, shorted here, nice pip run. It's coming back up here, short it again. Reload every freaking time it goes up here. If you would have shorted up here, you would have had a nice 1,000 pip run, and just don't trade it up here if you didn't want to. Could have shorted again, got a nice 630 pip run. Guess what? It's going to give you that one more opportunity once you get into this zone for another possible 630 pip run. Okay. Another possible opportunity. This would be an area. It's looking like it's breaking up. So let it go up a little bit. It covered all of this mitigation, right? Even though it has all of this fair value gap. It was a nice fair value gap here. So I would have expected it to pull back up. But it doesn't mean that it will go all the way up. Look for areas of confluence and then get ready to take it. To me, just obviously the change of character is right there. That's a change of character location. Get that break of structure right there. We're going down, right? But you can take a short. You can, if you're wrong, cost average that in. But chef yen, it's nice price area. Too short. I'm just saying I'm looking for it to go a little bit up. Okay, that's all the yen crosses we have there. Let's go quick on the other pairs, minor pairs. Let's start with the daily on your odd. Wow, you're odd. Oh, I kept going. All right. Well, I hate to say this again. I'm bearish. I'm still bearish on your odd. Now, this is in an upswing, but this is on the higher end of the upswing, and we are coming to a very strong area of supply, right? This is a nice area of resistance here. It's looking like it's rejecting here. So this is a nice area. I would like to see to be short your odd. Obviously, odd have to be strong. Odd has been weak. It may continue to be weak, and this could potentially, okay, even though I'm short, this could potentially come anywhere up here in this area before we go short. So be aware of that. And we're talking about a nice, 100 to 200 pip, 250 pip range. All right. So if you were to short here, which I wouldn't quite short it here, I'll wait for it to come up a little bit and let it give you a hesitation, and it doesn't give you a, another high, and it start to do this again, then you get short it, right? Now, a lot of people will say, well, I did that here and it went up on me, right? You could have said you went it here and it went up on you and hit the stop loss. Well, that's why we cost average it, because these binary crosses are unpredictable in terms of what they are doing. So in other words, you got into this area right here. This is that's a nice short. That is a nice area of supply, right? But we're talking how many days, right? How many days was that? Think about it. This was back in March 22nd, all the way to April 4th. So from March 22nd to April 4th, it was in this range. Of course, it looks very, very weak, right? And it looked like it wanted to break, and it broke down. So it created this low, and it did not break it. In fact, it recovered and broke the high, and now it created a higher high. So now we're in this continuous bull run, this uptrend. Now we're in a higher high. This is an area to where it's a good short, right? It's a good short area. You don't want to short the low. This is where you would want to short here. You go to the lower time frame, drop down to the lower time frame. We're not quite where we want to be from a supply standpoint, meaning there is still room to the upside. Still room to the upside. So what I'm trying to say is, if you short it now, there is potential that it could continue to go up, or you can be in this range for at least 2 to 3 weeks. That's what's up with these minor crosses. You swing trade these, which I like swing trading versus day trading, because you're going to either get stopped out often if you day trade and try to scalp this, and you're going to have a pretty high win rate, right? Other than that, these are great pairs to swing trade, because you may be in these ranging conditions for 3-4 weeks. If you were to short it, hopefully you get a nice run. You want to cover and get out. I am more bearish. So if I was to short it here and it went up against me, I would cost average again. It went up against me, cost average again. But you're going to hold these trades for a good 3 to 4 weeks before you cost average out and win. But you will win the trade if you trade it the way we traded and we swing trade it. But other than that, if you wanted to wait for clear market structure, then you're going to wait for a break, right? And I would say that this was a nice break of structure when it came down, and it stayed down, and then it came back up. And it's just the way it is. Now, this right here would be a good change of structure. That's kind of a market structure there. Yeah, that would be a nice, because we came here, created this low, equal high, and we're going to need to see the breakout structure here. If you wanted to be conservative, then you want to take an entry on the reject and retest, or the break, I'm sorry, break and retest here. In other words, you would want to wait for this and then take a trade here to go short. For me, cost average, swing trade it, nice place to go short now, let it come back and be ready to short it again. You are very close to a very high supply area. I would be looking for this thing to go up and come all the way down. Anywhere in this area, that'd be a nice 500 pip down over a course of weeks and days, right? So you're odd, bearish on your odd, pound odd. It's going to be kind of following suit, go down to the daily, go up to the daily, sorry. Yep, this thing did come down, it didn't break and stay down, and in fact, it went up. And where do you think it's going? Yep, it looked like it's going to the very clear area of supply. So you may want to just wait until it gets up here. Or you can cost average short here. So in other words, if you wanted to, you can go possible short here. Take another trade up here. And take another trade. Maybe right there, if not in this area, right? But there is a possibility that this could go up 185 pips, 470 pips, which is pretty steep. Now, that's what I would do, and I could hedge it, take my profit there, cost average, hedge it, cost average. You know, that's how we trade it with these minor crosses and swing trading it. Or you can just wait and put an alert here once it gets up here. And once it get up to the 1.89 even, this is a very, very strong supply area. I believe it's going to go up a little bit more, and then I will be looking to short it, because this was going to be a nice short down right here. In fact, it could come all the way down here and be in that area. May not come this low, but at least come down to this low here. Okay, but right now I'm looking for a little bit more bearishness. It's not quite ready to take a short here. Even if it does, you would want to look for a lower time frame, look for the break of structure coming down. Other than that, it's still in the uptrend. It's still very strong. It's still very bullish. There is a possibility with your odd and pound odd to go up a little bit more. Once you get into this area, that'll actually be a good place to take your single entry. But if you want to cost averages, just look like it could possibly go up more, and then you'll be ready to take a nice sell. So little bullishness, but then get ready to go short on your pound odd, just like your odd. Okay, your CAD. Ooh. Nice. Nice area right there. Very nice area right here. Okay. So with me on your CAD, obviously this would have been a great area to go short. I think your CAD is going to come up a little bit more. Get like we created a lower high. Right, this is clear uptrend. This is a nice little pullback and retest, and then went up more. This is a very strong supply area, and it came back down. I think it's going to come up a little bit more. I think it's going to come up about right here, maybe somewhere in this area, because it's looking like it wants to go long. That was a nice rejection there. Very good area to go short. But if you went short on EuroCAD, you may want to get out. It's just looking like it's coming back up. If it takes out this little structure right there, then this is going to go up, right? We're going to come back and retest it. We could come back into the supply zone here, and then I'll be looking to short it. I would. Okay, how about pound CAD? Ooh, look at that pound CAD. That's a nice supply there. Obviously, there's a nice one up there. This is looking like it wants to go higher. So we're in an uptrend. This looks like it may go higher. So there is a possibility that we could just break a structure here. And if that happens, then this is going to go up. Okay. If we stay low, this can happen as well, right there, because we had this nice rejection. This is a nice area right there. This would be that line in the sand right there. We need to see that change of character right there. So pound CAD looking like it's still bullish, look like it wants to break. If it breaks this is going up, and it's going to go up to the next area of supply, which is a nice area to take 419 pip, but it need to break this. This is a very key strong area of supply. If it doesn't break this and it start to come down, start to retest this, then I'll be looking to go short. Okay, so this can go either way, but I would need to say with this rejection here, it did fail to take out this high. So this would need to come down. It need to break this low for me. And once it break that low and confirm low, then I'll be looking to short it. But if it's come back up, retest that and take out that high, then I'll be looking to go long. Okay, that's pound CAD. Your NCD. Ooh, look at this, your NCD. What is this? Nice area of supply. This would have been a nice area to go short. Nice area to go short. Still looks like it's a nice area to go short. This is where I would want to short it, and perfect. However, there's this opportunity that it could pull back. Don't be surprised. And then it would need to create a low, which I'm not confident that yet that it's there yet. Right, so this was the low here, came back up, it created this low. I think it's going to play in this area a little bit. And then come down. Right, so I think it's going to create some type of lower low structure, lower high structure for some type of change of character. Right there. But this was a nice low. If you would have went low here, short here, that would have been perfect. That was a nice area of supply. Nice area of supply. This would have been a good area to go short and hold it, but I think it's going to come back and retest it a little bit. So in other words, it's going to come up and do something like this where it comes up, short, come back up, retest, and then start to fall. I think it's going to do the same thing. It's going to come up here. It stopped right there. It didn't come out and take out this low. This is the lowest low, right? If you think about it from a market structure standpoint, we've been holding that. And it's been doing pretty good in terms of low highs. That's a lower high. We need to see this pair break that, retest, and then come low. That is going to be very, very critical for this pair on your NCD. Therefore, with your NCD, I see this doing ranging. I'm not. If you were to tell me, is it ready to take a trade? I wouldn't be ready to take this trade on your NCD unless I just automatically took it like right there, right at the top, and I caught it, boom, I would have took it right there. But right now, because of that move, I'm looking for it to pull back a little bit, but I need to see more structure to tell me if this is not going to take out this high and go higher. Very good key supply area, good place to go short. I would want to see a pullback. In other words, now that it created this move down, I'm looking for it to pull back. And as long as it doesn't take out this high on a lower time frame, drop to like a 4 hour, obviously a 1 hour or 15 minutes, and then look for it to, you see how it came back up, and it came up a little bit, came back down. Look for it to come back up in one more time, and look for a rejection on a 1 hour per se, and make sure it doesn't take out this high, give you an equal high, that's fine. Then I'll be looking to go short on your NCD. So I'm bearish on your NCD, pound NCD. Ooh, nice area to go short. This has been one ranging pair. You can see it right there, how clear it is from a ranging perspective. Okay, higher time frame, you can see how much it's been ranging. And guess what? We're back on the upper end of that range again. Okay. So this is a nice area to go short right here. And if it goes higher, obviously you would have to short it again, right? There is a potential that it could come back up another 355 pip, right? So in other words, if you take that short here, you definitely want to take a hedge and take an opportunity to come right back up here and get ready to get out of your hedge, right? Because it is very clear on an uptrend. It's at the peak of an uptrend right here. Very, very peak. Right there. It's in a very key supply area, which is very, very good. That's good to note right there. And it's in a very key supply area right now too as well. Demand area. I would like to see it take it all the way down here. Okay, so if you would take it from this swing high to this swing low, and this is what I'm talking about right here, from this swing and swing high, and it came all the way down, and this swing low here, we're past the 50%, 618, 786, 886. Okay, this is right here, between 618 to 886 is the golden pocket. This is where in the premium zone of a swing market structure, this is where you want to look for nothing but buys, and you'll be fine. If you would have took a buy right there, I would not have taken a buy right here because this is, well, this would have been okay. If you would have took a buy right here, you could see it went up higher, then you would want to take another buy here. It could go one more and could go here, right? That is a possibility. That's why we cost average these minor crosses, because of the potential where it could be moving. and you want to hedge it to come up, take profit, hedge it, come up, take profit, and just harvest the average to sell, because you're in the right location as it wants to come down, and this is where you would want to sell, right? Because it's going up. So I am more bearish for pound NCD. This is where you want to short it. 50% mark here. This is 618, 786, 886. This is where you, I'm sorry, this is definitely where you want to sell. Sorry. This is definitely where you want to be bearish. Okay. This is in the premium zone. This is where you want to short. If you would have shorted here, that would have been fine because it's greater than 50%. This is a 618 zone. But if it went against you, well, obviously it's not going to go up too high, right? This is 100%. And this is where it really breaks that. Okay. So you definitely want to short it there. You can short it now. Potentially it can come up and get ready to short it again. Okay. So I'm bearish and I'll be looking to short pound NCD. Nice area too. A nice swing. This is a nice area to short right now. It's on the up end. It pulled back a little bit. Let's go out to the 4-hour time frame just from an anatomy of an entry standpoint. So you got to go to the lower time frame. You can go to a higher time frame to see where you're at from a buyer standpoint. But if you go to the lower time frame and tighten up your supply and demand zone, obviously, take a look. See that rejection? Nice area rejection. Nice area rejection. Now the next area of supply is up here. Could it go here? Absolutely, it could go up. But you're in a nice area of where you would want to short. Anywhere in this area, you can always short, be good. If you would have shorted up here, you would have at least got 137 pips. You would be looking at 137 pips. Could it go up higher? Sure. But if you would have already moved your stop loss to break even, then you would have been able to get out, or you can get out right now, look for an opportunity to where it can go possibly up and reshort. But right now, if I was to short it, you could, because it did not, it created a lower high, lower low. It could come up a little bit more, it could not. This is kind of iffy for me. At this point, if you wanted to get into this trade, then you would want to wait for this breaker structure down here. Go short, sell it. Because right now it looked like it's rejecting. It looked like it may come back up and do a little bit of a retest. But other than that, I would definitely look into short this to the low. It's in this nice little range. Now, the thing about this range is that it is eventually going to break out of this range. It's eventually going to break out of this range. Now, I think it's going to go more to the upside of the range. Looking at the weekly, you can see, look, I think you guys would probably agree that is most likely in this range. It's going to be more potentially can go up here and eventually up here, because this is kind of a downtrend and it's been at the extreme low of pound NCD, and then it's been in this nice little range. It is definitely eventually going to go up. So long term, I see the upside of this. However, we are near the upside. However, I think it's going to be at least enough for a pullback on the lower time frames. Go to the daily. At least another pullback down here. This is the nice run. You would definitely want to short here, catch the pullback, see how far it comes down before it comes back up. But other than that, I'm bearish on pound NCD, looking to short if you're not a short already. Couple more. Cat Chef. Oh, reload. Look at this. Anytime it gets in here, reload. So it's creating lower highs, lower lows, lower highs. I think it's moving up. So what I'm going to do, I'm just going to move this over just like that. Okay. This is still the target for CAD Swiss francs. Okay. However, CAD has been kind of weak. It may break it down here again. We may get somewhere here, and it could come back down somewhere here. But this is the all-time low for CAD Swiss francs or CAD, even though CAD could be weak a little bit this week, it could be just a little bit stronger than Swiss francs. Okay. For it to come back up. But I would say anytime it comes back up here, you would definitely want to take cover or move your stop loss to break even. And then if you were to get out, let's say you get in a buy here and it comes up, you can take profit. What if it goes higher? Well, it's going to come back and retest, then go back for a re-entry. You can always get a re-entry. So in other words, what I'm trying to say, if the way you would trade a range like this on these minor crosses like this, you buy, get out. You buy, get out, you buy, guess what? You get out. And then price is going to come up, get another marker, price is going to come up, might break through, but it's going to pull back. When it pull back, you get that buy. And the reason why I say you want to be on the buyer end on this, because on a higher time frame, this pair is bullish. I would not want to do anything else but to buy this from the bottom all the way up for the next 1 or 2 years. Right? So this is why I'm saying I'm more on the bearish side of CAD Swiss francs. This is a minor pair, meaning that it can range a lot and it can potentially put you in the trade longer than you would like. Right? That's why I don't trade every single minor crosses, because I take 1 or 2 minor cross trades because I know I'm going to be possibly holding that trade if I'm wrong. Or I could be possibly holding that trade to make profit for the simple fact that it ranges more. Okay, so that's CAD Swiss francs. And one more before we look at some other minor crosses real quick. Euro pound. There it goes. Making its way down. That's what I want to see. So, with this being said, I'm looking to short it. Yeah, this is what I want to see. I want to see this right here. This is my ultimate location. Now, could it go lower? I'm sure. This is definitely where I want to see Euro pound go to. Okay. If you look at it from a higher time perspective, and you take that fractal and you look back, you can see where all the way up here, these are all areas to do what? Short it, sell it. Got that high. Now we go back and we zoom in. This was an area to short. And every time it comes in this area, right? If you were to take this chart and you will break it in half from this swing to that top of the swing, anytime it comes into this area, that would be your demand supply that you'd be looking to short it or sell it. And anytime it comes in this area is where you'd be looking to go long or long it, buy it, right? You would want to buy it here, 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 and here. You will want to short it here, 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 short. Every time it pops up, you want to short. We're right on that 50%. Okay. But coming from the swing high up here, right, we're creating lower lows and lower highs. This is a downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. What are we missing? Lower low. All right. And I think everyone can see that. Well, we create lower highs. We're going to come back down, lower low. You may see a little bit retest, lower high, and then boom. Okay. So on euro pound, I am bearish. Quick look at the other pairs on pound Swiss francs. Nice, nasty little range. I would say it already made that high up there. Here, 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 here. Obviously, it would need to come back down. Could go a little bit lower, and then come right back up. Okay, so pound Swiss francs, I'm a little bearish. Odd CAD. Wow, we came all the way back over here, just like I had it marked up. Okay, so with this being said, we're right at a very strong area. This is the swing low, swing high. You see where we're starting to come down. So this is the area where we start looking to go long. We want to be buying anything with odd CAD. We're at a 618 location, 786, 886. And if you look to your right in the future, right? We don't want to look here. We want to be forward looking, right? So we want to be more predictive than we are reactive. So we look forward. So we see 786, 618. 618 is right there. We got 786, we got 886, and then we got 100%, which is down here. It could come all the way down here. This is 100%. But in the meantime, you want to look for areas of buying, right? And where are areas to where it makes sense? Well, we got a lot of fair value gaps here, and you got an area of demand, right? So let's clean all this up and show you what I'm talking about. So right now, we had a very good, strong demand area right there. If it holds, then we're going to be going up. However, we do have a very strong, let's go down to the lower time frame 4 hours just to see this a little bit better. If this holds, right, this is a good area to go long. This is a good area to go long. And this is another good area to go long before we get down to 100% of the swing. And anything below here would be extreme market conditions, right? So what we do is, say we short it, we go long here, we buy here. Say price comes down, well, we'll hedge it, we'll take profit, we'll cost average again. Eventually, it is going to pull back, right? It's going to do this. If we drop lower, it's going to pull back, right? And these are very good key areas because of the fact that we're in the discount zone area. So what I'm talking about. So just swing low, just swing high. Right now, we're at the 618 level. This is a great area to go long. But could it potentially come down to the 786? Well, what's just near 786? We got a nice zone area. So maybe not quite 786, somewhere in this area. This is a nice area to go long again. So you can cost average these trades if you're wrong, right? But other than that, a lot of people will say, well, this is a downtrend. It is, but we are mean reversion to trading, meaning we're catching the bottom, but we're looking at market structure to confirm. like this one right here, obviously it came back and bounced off that. That would have been a nice buy, but then you would have had to take profit because it looked like it came down and it finally broke, and it came down to this nice demand area right here. Nice area demand where you will want to buy. Nice, right there, buy. But then it came back down, and now we got to see if it's going to come back down, if it's going to hold, right? So this is going to be very key. Right here is the area of change of character, right? I'm talking about odd CAD. So NCD CAD is going to be kind of similar. So now we got to see if this is going to do this. Break, retest, and go. Okay. We get that when, if you're in a buy already, this is perfect. If you're in a buy right now, this is still okay. However, take the opportunity to know that it may go against you. And if you go train a stop loss game, you're going to be very frustrated because it's going to stop you out. But if you're playing a hedge and cost average, like we teach our coaching students how to manage the trade, you can be profitable whether you're wrong or you're right. But especially if you're wrong, you can be able to manage it because you can cost average it back to this zone, because trade is eventually going to pull back, right? Now, what if it goes against you, blah, blah, blah. I said, okay, well, we keep going against you. We'll keep playing this game. It is going to definitely pull back. This is a very good structure to play this game. And we can't predict the market and be right every single time, right? And you can't give up. But we teach our coaching students how to manage this and how to trade this to where you can trade this and manage it if you go wrong. This is a good area to go short. Go long. Very good area, right? Obviously, you don't want to go long here, right? This is the area where you would want to short. This is a very good area to go short. Look, boom. This is an area to go long, right? Like right here. This is not a good area to go short. This would be a good area to go long. Look, this would have been a good area to go short, not long. Look, boom, it went down, right? Now, if you right here, say for instance, you went long here, you were right. If you went short, you were right. Now, if you went long and it keep going down, it could, just like there. You went long, went up a little bit, and went short. That could happen. So what are you going to do? How do you manage that trade? How do you still be able to win that trade? You got to be able to cost average that trade to be able to be profitable. Yeah, you may suffer some downtime in terms of some equity, negative equity drawdown, but we can manage drawdown better than you will want to manage losses. You're going to have to pick one or the other. It's not to say you can't be profitable trading the stop loss game, but that's how we trade it, especially with these minor crosses that can put you into ranging pairs and ranging conditions. But we know that the market is on an ebb and flow market. It's going to rebalance itself. You just need to be patient and play the game and still be profitable. Now, this is our CAD. NCD CAD is going to be basically the similar situation. Swing low, swing high. Just have more opportunity to come down to the downside. So I'm going to expect that this will be coming down a little bit more. So odd CAD looked like a better setup than NCD CAD for long. Therefore, I will be looking to short NCD CAD, to be honest with you. Because anything up here, we're in demand area, the 50% right here. I want to get into this 618. This is my area where I would want to buy. This is a very nice area to where you want to buy here. Anywhere in this area, as soon as it crosses that 50%, boom, you won't want to look for buys. Okay, this is too prematurely to start looking for buys. However, if you would have went long here, yeah, you would have went great, but coming back down on you, right? Now it's starting to look better. So I think there's more potential downside than it is on NCD CAD than it did on odd CAD. Okay, so let me go down to the lower time frame, clean up the supply and demand zone a little bit, tighten it up. You see where it's starting to create lower lows, lower highs. This is a lower low, and it's starting to come down. So I think this got more room down to the downside. So I would be more bearish than I am on OddCAD. So with that being said, this is kind of similar to each other, NCD-CAD and OddCAD, meaning NCD-CAD, Odd and NCD are similar in terms of the region, in terms of being kind of like a stepbrother, stepsisters to its brothers pairs, like euro and pound. So they both correlate a lot. And if you look at the correlation chart, NCD-CAD and OddCAD are really close, not really close, but they're kind of closely related. So both of these will rely and have to rely on the weakness of those currency and CAD being strong. So if you look at odd CAD, well, odd CAD looked like it's already been making this move down. So in other words, there is potential more downward movement, which kind of makes sense if you look at it from this perspective. 618 is down here still, hasn't came down this low yet. So there is more potential downside that it could come all the way down to this low. So you could be, buying long. So you could wait for more confluence. That's okay. And put some alerts here around here. The 0.889, put alert there to see if it's going to come down lower. I do believe it's going to come down a little bit more, even though this is a great area to buy. I gotta say, it is in a downtrend. It is creating lower lows, lower highs, lower low. I would need to see the break of structure for it to come higher. But if it don't break that, well, go to a higher time frame on a daily. Let's go to the daily. Oh yeah, this to me right here just would be the break of structure. I would want to see it on a higher time frame. If it doesn't break that, then we'll go on lower. Okay, put it that way. Now I got a higher time frame perspective. We could be going lower, and this looked like it wants to go even lower. So I say we're both NCD-CAD and OddCAD. Yeah, I would say more bearish. Let it go down a little bit more and allow it to give it some opportunity to buy. I would say by the end of the week, we'll see exactly what OddCAD and NCD-CAD if you were looking to get into this trade before you go long. Okay, OddShaft, real quick. Oh, I would be bullish. I'll just move this right over here. I would be buying. I'd be more bullish on OddShaft, NCD-Shaft. I'm going to say same thing. One a little bit lower, even more, giving you even a better perspective, an opportunity to go short. Go long. Right? Look at all this up here. So it's been in this nice little downtrend here, giving it a nice area of support. This is a nice area to go long. Okay, could it go lower? Sure can. How are you going to manage that, right? You could be wrong, but I would want to go long here, then short this. Like here, I would want to long this and go and put a buy, then short this. Now, this doesn't mean it's going to do the same thing, and it could. But if it comes down and it comes down to this support, you got to be ready to buy again or re-enter the trade, right? So this is definitely on the discount area of this swing low and this swing high. This is in the lower half of that discount. This is where you would want to go long, to be honest with you. Okay. Odd NCD, what are you doing? Ooh, came all the way back down. Nice. So this right here, you see how it's in the discount area? Just the swing low, just swing high, came all the way down to 786. Look at that, 786. Boom. This would have been a perfect area to go long. Okay. So I'm more bullish on odd NCD. If you're in this trade, go long. Okay, that's odd NCD, Euro Swiss francs. Hate this pair. Look how awful it is. It just ranging. Looking bearish. Okay. See what it does this time. It's ranging between this demand area and this supply area, and it's been doing that since last year of October. But it's not really doing anything. It came out of this drop right here. It's been bullish though. So in other words, if it came down here, I'd be looking to go long. I wouldn't be looking to sell in a range, right? Because when you're in a range, you want to look at the higher time bias and say, okay, if you're on a range, pick a side that you are going to be buying and selling. This nice drop here, we should have been doing nothing else but looking to buy. If you're trading your Swiss francs, right? You want to buy here, you want to look for buy here, buy here, buy here, buy here, buy there, let it come down to about right there, and just keep buying. So that's how I would trade this. Okay. All right. So I think that's all of it. Tomorrow's Easter Sunday, and then we are back in the market. We got some big movements coming this week for the dollar. So that is going to be an interesting situation. So we're in an inflationary situation, high inflationary situation. We'll see on CPI if the inflation is coming down. Regardless, it looks like we are definitely going to be seeing a uptick in the interest rate for the dollar. We'll see the minutes coming out on Wednesday for confirmation of what the Feds are looking at. If the economy is very strong in the U.S. dollar in terms of the employment. Employment is very strong in the U.S. We've still got 3.5 unemployment still. Is that what I saw from last week? So employment data was really, let's see, switch over to real quick. Historically, non-farm payroll, we saw unemployment 3.5. That's pretty low. That's pretty good. And we created 236,000 new jobs over expected only 228. So our economy in terms of the employment is still very healthy still. So with that being said, I think the dollar is definitely making a case, or the Fed's definitely it's stuck between a rock and a hard place in terms of needing to make a decision on what they're going to do, especially when they're facing a very strong employment. When people still got jobs, and people, if you got jobs and they're still making money, they're going to still spending, and therefore service and everything else from an inflation standpoint still going to remain kind of sticky, if you will, and it's going to come down very slow. So they need to do something with the employment, and therefore higher interest rate on the dollar, making it more highly expensive to take out loans and borrow. Kind of makes sense to slow down the economy as much as they can. Okay, so we're going to be taking a look at that from a live trade room perspective back on Tuesday, Wednesday, and Thursday. Get back into our markets and get ready to look for some great setups. Other than that, have a great Easter Sunday tomorrow. Have time with your family, and I'll see you guys next week as we get ready to get into the markets. All right, see you guys later. Have a good day. Thank you. Bye-bye.